All right, jumping back into the Bitcoin price action. Today we're going to be looking at Bitcoin along with the S&P, DXY. Also looking at some indicators from the Federal Reserve to see where we are locally in the market, as well as I did go ahead and attempt a leveraged trade last night just on testnet. We'll go over why I attempted that trade. Confluence is used for it. So if you're trying to do the leverage trading, which I don't recommend, but if you are dead set on wanting to be a day trader or whatever, I will go ahead and cover that as well towards the end of the video. All right, so starting off here on Bitcoin, we're on the hourly time frame. You can see we did set a new low. I kind of warned you guys in the last video that, like, hey, we're at big resistance right here. I would not be surprised if we pull back, expected to sweep these lows. We did go ahead, sweep them, but weren't really able to, hold it and confirm that as support there. We did go ahead, fall all the way down to sweep this level here. Took some time to get back over it, right? But we did end up making higher highs on RSI, lower highs on price. 1 hour bull div, launching us out of the lows and jumping over to my chart with all of the levels. You can see here we did find support on this previous week value area low, as well as we were inside an order block and barely touched this fair value gap. So there was some good confluence for this low, and you can see now we are sitting on top of our weekly and daily value area high because the week did just open. So we are creating the weekly volume profile right now, so that's something to take note of. The resistance we are finding right now is just this previous value area high, as well as hourly EMAs. So yeah, a little bit of resistance at the top of that wick. Our big resistance is still back up at where we found it before, up at these highs. But if you know anything about, resistance and support levels, when you go ahead and test something a second time, it's more likely you do go ahead and break through it. So, when we do make it back up to these highs, probably going to break through them. The only thing I might be watching out for is this value area low, fair value gap, because we haven't really back tested that. So, we could sweep this level, a bink, and then head on down here, 59K, that's that big level. So that's kind of what I'm seeing as worst case scenario here, very locally. Just know if we do go down to this level, it's still bullish, right? That would be a great long opportunity, although I will warn you, that's going to be the mother of all wicks. You can see, when we do get these volatile wicks down into this range, they are big. I would expect something like this if it were to happen, right? Just something super quick to grab all that leverage and then straight back up again. So that's what would happen if we do come down here. It'll be fast. It'll be violent. Do I expect it to happen? No. And the reason I don't expect it to happen is because we do have a lot of buyers that we're stepping in this range down here. It's going to be hard for them to push down price to that level, especially with the S&P going up. And we'll get into that here right now. So jumping into the S&P here, you can see we do have a bullish hammer candle back testing that daily EMA. Today's close was real nice and bullish. The fact that we have 2 daily closes now back testing the daily EMA confirms that as support, in my opinion, and tells me we are probably going to go ahead and hunt the liquidity behind these highs, because if you know anything about poor highs, these things are poor, meaning there's a lot of liquidity behind this level. So I can almost guarantee you, even if we're going into a bear market, worst case scenario, we're going to go sweep that. So I would be looking for us to break all-time highs here, telling me that Bitcoin is probably going to follow. And something interesting that I was kind of looking at on the S&P, right? If we do jump out here to more the macro, this is something interesting I was looking at just a second ago. If you do go ahead and pull trend lines from your lows to highs on each one of these waves, you can see this is our first line of attack, pretty average uptrend. We go ahead, take another trend from this low to this high, second line of attack, steeper uptrend, right? If we were to take, again, very locally, so is this going to play out? Who knows? But just, theoretically, taking these 2 points, right, high and low, very locally here, if you were to extrapolate that out, third line of attack. So, this is the definition of a parabola here. This is kind of what I expect for the S&P. A full-blown parabola and then doom. Do we make it this high? Maybe not, but something like that. And if we already have this big blow off top on the S&P, I can bet you Bitcoin's also going to have a blow off top, and that could be the case for another blow off top similar to 2017, which I discussed in my best case scenario video for Bitcoin. Yeah, so the charts are saying some real exciting times might be underway here. Of course, though, only time will tell, so we got to wait and see if this does in fact play out. but I have no reason to believe that it won't due to macro indicators that tell me a large recession is coming, which if a large recession is coming, what do you have before a large recession? A blow off top, right? As well as those indicators pointing towards that recession not happening for at least another couple months to more likely the start of 2025 for that recession to actually take place. So if that were to happen, we have a blow off top going into 2025, right? And just so I can show you what I'm talking about, let me cover those indicators for you. So first thing is going to be the SOM rule. This is a recessionary indicator that a lot of smart money uses. Go ahead and look up SOM rule if you want to know the definition. Essentially, every time we get over these EMAs, it signals recession imminent. You can see back here, when we went ahead, back tested these EMAs, that was right around the start of COVID. So, big black swan event there. Go back a little bit further. You can see this is September of 2007, right before that 2008 recessionary collapse. If we go back even further, you can see this is 2001 dot-com bubble. So as you can see, past 3 times this thing has crossed the EMAs that has signaled a recession imminent. Where are we right now? Well, we're getting within the band of it, right? We're getting close to the EMA here. But, previously when we've gotten inside this wave, it doesn't automatically mean recession imminent, but it can mean we are getting dangerously close to that recession. So that goes along with my thesis that while a recession is soon, possibly a depression, we still have some time for this thing to wash around in here before it actually does confirm that the recession will take place. And as you can see here, the circle I just drew right there, that's to tell me it's June 2027. So obviously this indicator is very arbitrary on trying to line up an exact time frame for like a prediction, right? You can't really predict when something's going to happen based on this indicator, but this can tell you that, hey, the recession is not imminent yet, and we are close to one. And when you're close to a recession, that's where you get catalysts for big blow off tops in retail euphoria because, you have the boom before the bust. So that's one of the indicators. Next is going to be a screen that's really bright, just fair warning. This is the Federal Reserve's inverted yield curve. It's the 10/2 year bond maturity. And as we can see, we have gotten under the zero line. What does that mean? Well, it means a recession is cooking. If you remember back in July 2022, this is when a lot of bears were coming out saying, hey, we broke through the zero line. We're about to enter a recession. Once we were getting down here low in the inverted yield curve, all those bears started screaming like, hey, the recession's going to happen. What are you doing buying crypto at the lows? The yield curve is crazy inverted right now. And while, yes, it is a recessionary indicator, when it's inverted is not when you have to worry. The yield going inverted only tells you that a recession is likely to come in the future. It's not till you get back over the zero line where the recession actually happens. So just to give you an example, zooming back out here, this goes all the way back to around the 1990s. You can see before COVID, we swung below it for just a second and then got back over the zero line. It wasn't until a little bit later that we did go ahead and actually have that black swan event. But by definition, it was a black swan event. So using an inverted yield curve to predict a black swan event isn't really a thing. So let's just ignore 2020, even though it did, kind of get inverted there in 2019. Let's go ahead and look at 2007. September of 2007 is when the recession really started. You can see that we crossed the zero line in June of 2007. And it wasn't until we started the uptrend in the positive that you actually had the recession take place around September. So as you can see, it goes inverted, tells you something's going to happen, but it's not till you clear back over the zero line and start the uptrend once again that the recession is actually imminent. We can see same thing back for the dot-com bubble, goes inverted, but it's not till we get back out of this thing that the recession actually starts. And not only that, while we're inverted is actually when the markets are the most bullish. This is when we have our bubbles. This is where we have our blow off tops. This is when the market is euphoric, is when we're inverted on the yield curve, as we are right now. You can see we've been inverted for quite some time, and during this time, the markets have been rallying. We are, however, getting dangerously close to getting back above that zero line. So that tells us that, hey, a recession is coming, right? Could be in just a couple months from now. But you don't have to worry until we get across the zero line, and it is more likely than not that the blow-off top actually happens just before we get back above the zero line. So that's another indicator that tells me that a blow-off top here is definitely possible. Lastly, CME's predictions of the Fed rate cut. If you've been watching my videos, you know my thesis is I believe the markets will top just before or just after the Fed cuts rates. Let me go ahead and jump back into TradingView actually real quick. So what you're looking at now is the United States interest rate given by the Federal Reserve Every couple months, they have an FOMC meeting where they give out the numbers for that interest rate hike, cut, or pause. As we can see, we've been paused for quite some time, since around July of 2023, and being paused is great. That's a good catalyst for a bull run. Pretty much all the other bull runs we've had before are during a pause. As we can see, 2021, we were paused during the bull run, and then we had aggressive hikes around April 2022, signaling that, hey, something's probably wrong in the economy. They are aggressively hiking. This is not normal. But it's not only just when they start hiking that is bearish, it is also when they start cutting, right? Anytime the Fed rotates their position, going from pause to hiking or going from pause to cutting, it tells you that there's something wrong in the economy, and they are doing that to try to fix the economy. So it's a signal that recession is imminent. As we can see here, September 2007. Right when the Fed cuts rates back in 2007, signals a recession is imminent. So of course, then we want to know, hey, when is the Fed going to start cutting? Because I don't want to be in the market when that happens. Well, jumping back over here to the See Me Watch group, these guys predict the Fed rate cut with nearly 100% accuracy. You know, the Fed does not like to go against the markets. They give them enough hints to where they will be able to predict what's actually going to happen here. And that's why the markets might front run it. So, you know, if I know the Fed's going to cut in 1 month, I'm probably going to start selling now, right? I'm not going to wait for the cut. So if you know the Fed's about to cut, it's probably not worth waiting for that cut to actually start taking profit. Might as well just go ahead and do that right away. But is the Fed going to cut next month? And well, the answer is no. If you look at the May 2024, there's a 97% chance that it's still going to be paused. What about June 2024? Still 88% chance you're going to be paused. What about July 2024? Still 70% chance. Now, I mean, that 30% chance, that could fluctuate. So, you know, you want to be watching this because, you know, there is a chance in this upcoming FOMC meeting, they do signal like, hey, we actually probably are going to cut in July. And then this will jump up to a higher percent chance for a cut in July, signaling, let's get out of the market now. But as of right now, we don't have to worry about them cutting in July, right? 70% chance they won't. What about September? And as you can see, September is the danger zone. Again, this can all fluctuate, and I actually expect it to fluctuate. I kind of expect them to push it back to like November or December because they consistently have been doing that. I originally said the top's going to be in April because they originally predicted a Fed rate cut in May. And as you can see, it's now 97% that they're not cutting in May. So this stuff does fluctuate, especially when you're looking this far out at something like September, because they're going to use these next meetings to decide that. So be on the lookout. May 1st is when that next FOMC meeting is, right? That's coming up here real quickly. So make sure to go watch the meeting there. I might do a live stream on this YouTube channel, even just covering the FOMC meeting, watching markets, because markets are always volatile on FOMC day. So that's definitely something to be looking out for. Let's see if they do change these. But yes, it is looking like July, August are going to be times where the market is going to start de-risking if we do keep these numbers the same for September. It could signal that the summer is the top for markets, and we want to be watching for that. And just to cover the next few months, we can see November is a higher chance of a cut than not. So that's your election season, right? If they do push it out to November, that kind of aligns good with an election season being the top. So that makes a lot of sense there, as well as December, same sort of thing. So that's definitely something to be keeping an eye on, right? September is your big month. This summer is going to be, in my opinion, a very volatile summer where a big blow-off top potentially comes in, and it will be a time to be vigilant in the markets. Be checking all of these indicators, you know, every week or so if you can, and make sure that you're positioned correctly in the market and don't get trapped or stuck holding the bag. So yeah, just to rehash, this is kind of what I'm thinking on the S&P. And if that's going to happen on the S&P, where does Bitcoin go? Well, it's hard to tell, right? This is price discovery. It's Bitcoin. You never really know for price to predictions on this thing. But if I were to take a guess, I would say, you know, first big level is going to be like 90 to 100K, right? You might have that 100K swing fail trap. Other levels are complete blow off top parabola that, you know, .com bubble for crypto. It's possible. $300,000 Bitcoin. Sure, why not? Bitcoin is a crazy asset. Anything is possible. The market caps are feasible. It's not something that's, you know, impossible to happen. But of course, only time will tell when it comes to that. We just want to be watching our recessionary indicators. We want to be watching the S&P, and we want to be staying vigilant throughout the summer into fall, because I expect a big recession to come, right? Like maybe even a depression. Not only is there a currency crisis that is underway, there is World War III potentially about to happen. as well as we have a consumer and service economy that is full of credit card debt. So there are a lot of catalysts there for some sort of big recession, depression type event to be underway within the next few years here. Now that we've talked about the macro, I'm just going to go through local time frame real quickly here to see if we are, potentially going to actually pull back here, or if this is going to end up being the low. Right, so if you were to just pull a fib from the highs to the lows here locally, you can see that we got through the golden pocket, and this is now back testing it as support. So yeah, I mean overall it looks kind of bullish actually. I mean this is probably going to continue on up as long as the S&P continues up. The only thing that might be a little bit bearish is that we are seeing the dollar look like it wants to come up here, but I did actually watch a video on this just before coming out and recording this video, and they gave a case to be made that the dollar could actually run with Bitcoin because, I mean, the dollar is just valued against other currencies, or at least the DXY is. So if all these other currencies are getting devalued at a higher rate than the dollar, then that could still be a catalyst for money to flow into both the dollar and Bitcoin, right? If they're seeking safety out of foreign currencies, they're probably going to want to put their money in something stronger like the dollar, as well as capital markets and Bitcoin. So there could be a case to be made that the dollar actually does a run with Bitcoin here. It has happened before. If you look at 2000 during the dot-com bubble, the dollar ran with markets. So that's something really interesting to consider. The dollar does not have to go down when Bitcoin is going up. And that's something that was kind of news to me. So I'm glad I looked into that before recording this video, just so I could give you guys that information. Oh yeah, and before I end the video real quick, I did want to talk about that trade I took in the Discord, right? This is something I did last night. Confluence used to market long the Pico bottom. You can see here we had a failed auction, right? This is essentially when price wicks down to somewhere where there's a lot of sellers, not a lot of buyers, but price doesn't accept it, right? You can see we wick out of this area where we have heavy imbalances on Bybit and Binance. If we look at that locally here, that was down in this area right here. Let me get rid of this. You can see heavy imbalances on the bottom there on both of these exchanges. Look at the Bybit imbalances. That's crazy. You can see all of these red lines are imbalances that we made. And something interesting to actually take note of, you can see on Binance, we went ahead and swept this low a second time. But because there were so many trap traders on Bybit, the market makers were like, no, we're not gonna sweep them just yet. We're gonna rally it back up. So they actually were playing with all of these imbalances down there, and you can see one exchange not sweeping while the other one does, which was something really interesting to take note of. But yeah, essentially, I mean, I got stopped out of this position, right? It ended up coming down and sweeping these lows multiple times again while I was asleep. So there's no way I could have re-entered or anything like that. But yeah, this is essentially what I used to get into a really good position that I knew was going to go into the positive, letting me put my stop at entry with a really good risk to reward. I was up 3x what my risk was during the trade. So even though I did get stopped out of entry, I mean, I could have just taken profit and that would have been a really good, scalp strategy to be, trading these imbalances, right? If you are a scalper, that's kind of what you want to trade. It's like failed auctions, that sort of thing, where you actually have confidence that the market is almost guaranteed to go into your favor. So just thought I'd cover that real quick. Hopefully this video didn't go on for too long. If you do want to get more TA in a timely manner or see when I'm entering trades, although I will say if I find out you're copy trading or anything like that, I'm just going to ban you from the Discord. It's not a signals chat. It's not a copy trading chat. I'm literally just trading on testnet and kind of going through why I took trades just as examples on how you can actually trade stuff so we can all learn in there. It's about learning, not about copy trading, as well as it's not just about leverage. That we talk about altcoins and whatever you want to talk about in there. So make sure to go join the Discord. Links in the description down below. Thank you all so much for watching, and I will see you all in the next video.